10 o'clock Eastern. The Bureau of Labour Statistics will release a major revision to the jobs numbers. Some believe the new numbers will show the jobs slowdown began much earlier under President Biden. John Lonski joins me. John, were these numbers politically manipulated? What do you think?
Well, I don't think so. To be honest with you, Stuart, if they were politically manipulated, why not have lower than expected readings on payrolls pop up, say, 9 to 12 months before the election so that you would get Federal Reserve rate cuts that would help assure that the economy is growing rapidly enough to boost the likelihood of Biden's being reelected or whoever was the Democratic Party standard bearer. If this was true, there had to be at least one disgruntled employee who would have spilled the beans on those that were cheating.
Well, could it be that the numbers were just not accurately formulated? They gathered the numbers in a way that just doesn't work for accuracy. That's the case, isn't it?
That's exactly right. First of all, you have a problem with this establishment survey that gives you the number of jobs, and that is that it relies on a high participation rate among contacted employers, surveyed employers. That is no longer the case. About 10 years ago or so, 60% of those surveyed would respond. Today, that response rate, I think, is closer to 40%. So you have a problem with that.
Got it. Tomorrow, we get the Producer Price Index. Thursday, the Consumer Price Index. Lots of inflation news this week. Baseline question for you, John. Is inflation at the consumer level above or below 3%?
Core inflation above 3%. I would say it is definitely under 3%. That's what it feels like to the everyday consumer. I don't care what this report says. A lot of consumers, middle-class Americans, are currently being burdened by an elevated cost of living.
Okay. If we've got far fewer jobs added to the economy than originally thought, and we've got, let's say, a fairly benign inflation reports this week, do you expect a 50 basis point cut in interest rates by the Federal Reserve?
I would like to see a 50 basis point rate cut, but the consensus is still looking for a 25 basis point cut. I think we're entering into a period of slower economic growth, and it could well be that by the early part of 2026, we will be perhaps looking at a Fed funds rate of less than 3%. There's a lot of rate cuts in the pipeline, I believe.
Can we expect lower mortgage rates?
Eventually, they have to occur. Right now, the mortgage yield perhaps has come down to about 6.35, 6.4%. Housing is not going to recover on a recurring basis until that 30-year mortgage yield is less than 5.5%. And of course, that implies a substantially lower benchmark 10-year Treasury yield.
That's a long way off. No good news for housing yet. John Lonski, thanks for joining us. Always appreciate it. See you again soon.